In this short video, we're going to continue our discussion on negotiating a settlement for your IRS debt. Specifically, we're going to talk about situations where it'd be unfair or inequitable to require full payment. Now, as we discussed before, when it comes to your past due taxes, the government is just like any other creditor, and it's an accepted business practice to resolve situations in which a debt cannot be paid in full by negotiating and compromising a settlement. Now, the negotiation of a tax debt settlement between the IRS and a taxpayer is called an offer in compromise. Now, this is a legal, fair, justifiable resolution. The concept is to create a win-win situation so that the IRS can collect up front what would realistically be collectible over time. The old idea of the time value of money, that a dollar today is worth more than a dollar tomorrow. In exchange, the taxpayer is going to get a fresh start and a clean slate with the IRS and their taxes. Under effective tax administration, in situations where it might be unfair or inequitable to require a taxpayer to pay that tax debt in full, some examples would be if the IRS made some errors that, if those errors were corrected, would reduce the tax debt that the taxpayer owes, or maybe the IRS provided some incorrect information on which the taxpayer relying on that incorrect information created or increased the taxes that the taxpayer owes, and documentation exists that the IRS gave this incorrect advice, such as an email or a letter. Maybe a situation where a nonprofit health organization that provides quality health care to low-income citizens in a community owes some taxes. Requiring full payment of those taxes by that organization would compromise the quality of health care that they're providing, because it would take away funds that they need to provide health care to those individuals. Another situation would be maybe when a taxpayer had a serious illness for a number of years. During that time, they were unable to manage their financial affairs, creating a tax liability, maybe adding some penalties and interest to their taxes that have accrued over a few years. They've recovered from that illness, and now they're trying to straighten out those financial affairs. These are just a few examples of when it might be unfair or inequitable to require a taxpayer to pay their tax debt in full, but you kind of get the idea of some situations in which that might apply. Now, if you're unsure about your situation, would like a professional opinion as to your options, or get some more information, please visit the Lazat Law Group at getllg.com. There'll be a red tab there on the first page. It'll say free case consultation. Just click on that tab, fill out the short form. Somebody will call you back, talk about your situation at a convenient time. It's a no risk, no obligation consultation to discuss your options. It'll be a phone consultation, so you can be located anywhere in the United States.